The broadcast is now starting. All attendees are in listen-only mode.
Okay, we're back in business. Sorry about that. We had a few technical difficulties there. So, just like to introduce you to Sarah Tracy from O'Connor, Kelleher and Tracy Accountants and Auditors. Sarah's going to talk us through constructing business plans linked to the SCBI loans. So I'm going to hand you over to Sarah, and Sarah, you'll take it away from there. Thank you.
Thanks, Paul. Sorry for the late start. So, as each week passes, the critical impact of the crisis on business is becoming increasingly evident. While it is unfortunately clear that there will be business failures arising from the impact of COVID-19, it is crucial that the SME sector is strongly supported, as its survival will be the key to rebooting the economy. Over recent weeks, this has been recognised by influential voices in the banking sector, including the Central Bank of Ireland, individual banks, and the Strategic Banking Corporation of Ireland. The SBCI was initially introduced in June 2019 as a future growth loan scheme, and the majority of the funds were utilised by December 2019. The scheme was administered by the pillar banks. The main attraction was that certain loans up to 500,000 were government guaranteed, thereby eliminating the requirement of the company itself to provide security. Notwithstanding the government guarantee, the application had to stand on its own merits and was subject to approval by the various bank credit committees and the SBCI. The first step was registration with the SBCI, which was a relatively simple document to ensure the funds were utilised for a qualifying purpose. The objective of the scheme was to make funds available to small and medium enterprises to enable them to grow their business, and the attractiveness of the scheme was that loans of up to 500,000 was government guaranteed, thus eliminating the need for the borrower to provide security, because in many cases it was not available. Loans of up to 3 million could be secured under the scheme. The application process was a two-step approval, the first being the registration and pre-qualification, directly with the SBCI to ensure qualification with the criteria which was included: investment in plant machinery, working capital, research and development, process innovation, people and systems. The second step in the application process involved the preparation of a detailed business plan. This business plan was subject to validation and approval of the Lending Bank's Credit Committee. Many components of the business plan must include the following: brief history of the company, details of the proposed utilisation of funds, details of the proposed innovations, key staff, key customers and strategic alliances, working capital requirements, detailed profit and loss, balance sheet and cash flow projections for a minimum of 3 years, sensitivity analysis, and by that I mean outlining the impact of profits and cash flow if certain assumptions are not met. For example, what would the impact be of a hotel's profits and cash flows if occupancy achieved was less than 65% projected? All of the above are subject to the normal bank stress tests. The business plan should be capable of being fully understood and interpreted by someone who does not know your business, with minimum further explanations required. If you have to explain your business after someone reviewing your business plan, then you are in the losing seat. The terms with regard to the loan were normally an interest rate of 0.5% less than normal lending rates and cannot exceed 4%, and the period of the loan is 8 to 10 years. The main advantage, as previously referred to, of the loans up to 500 were unsecured. The funds available under this scheme in the main have been drawn down already and are circulating in the economy at present. However, as the world as we know it changed in March 2020, various new measures were required to provide liquidity to companies. Consequently, variations of this scheme have been introduced to support working capital requirements to SMEs. The Strategic Banking Corporation of Ireland COVID-19 scheme was unveiled on March 10th and has so far resulted in 17 million of loans being granted to 100 borrowers. The issue with the scheme are that it evolved from unutilised funds under the Brexit loan scheme, and the criteria remain the same. To be eligible, businesses must meet one of the innovation criteria, which is seen as unnecessary and a confusing hurdle by SMEs. The application process is similar, with details of the innovations having to be included in the first step of the initial registration with the SBCI, and this is what has resulted in a logjam and a low take-up of the scheme. Viable micro, small and medium enterprises and small mid-cap enterprises that meet the eligible criteria can apply. SMEs are defined by the standard EU definition as the following: having fewer than 250 employees, have a turnover of 50 million or less, or 43 million or less in the balance sheet, are independent and autonomous, i.e. not part of a wider group of enterprises, have less than 25% of their capital held by public bodies, and is established and operating in the Republic of Ireland. A small mid-cap enterprise that is not a SME would have fewer than 500 employees. So who cannot apply are small and mid-cap companies and SMEs that are involved in the primary agriculture or aquaculture sector, are in financial difficulty, except cash flow pressures caused by COVID-19 impact, are bankrupt or been wound up or having its affairs administered by the courts, in the last 5 years has entered into an arrangement with creditors in the context of being wound up or bankrupt or having its affairs administered by the court, are convicted of an offence concerning professional misconduct by judgment, fraud, corruption, involvement in a criminal organisation, money laundering, and other illegal activities. The other part of the application is the requirement for a detailed business plan, which by its nature includes projections and assumptions. And as we are all operating in a world of uncertainty, it is very difficult to make reliable assumptions at the moment. For example, the Restaurant Association of Ireland have stated clearly that for their sector to survive, they need a zero VAT rate for the next number of years. Does one, when complying with these projections, assume this? And if this is not to happen, would the figures be meaningless? Another example would be the hotel industry occupancy may only be allowed at 50%, so the period of vacancy between guests would be 24 hours. Does this make it viable for hotels in the regional areas to open and operate this year? Is this the scenario cash flows and projections would be based on? There are many other incentives being sought by the various sectors, which again would have to be incorporated into projections, particularly from a cash flow perspective. For example, this week the Revenue Commissioners have confirmed that no interest will be charged for outstanding tax liabilities for the next 12 months, and thereafter at 3%, down from 10%, subject to agreement with Revenue. Also, at this point in time, we are not sure how long the employer subsidy scheme will continue and at what rate subsequent to the end of June. Fundamental uncertainties such as these makes the forecasting of the next 3 years trading difficult, if not impossible, to predict, and those forecasts may be irrelevant by the time the application is being assessed by the Banking Credit Committee. The business plan envisaged under the SBCI COVID-19 Working Capital Scheme will require the following detailed documentation. 1. Trading history. We would suggest 3 years financial statements, including the 2019 financial statements. This might not be as easy as it sounds, as many audit firms may be reluctant to sign off on 2019 audited accounts due to the fundamental uncertainty pertaining to the current economic climate. 2. Detailed projections, which would include a minimum of 3 years projected profit and loss, balance sheet, and monthly cash flows. The assumptions on which these are based must clearly be spelled out and different scenarios factored into the projections. 3. Banks will require details of key personnel, key customers, key markets, key performance indicators in relation to working capital, cash flow, collection, etc. 4. A SWOT analysis together with details of goals and milestones to be achieved. The SBCI COVID-19 Working Capital Scheme is offered in partnership with the Department of Business, Enterprise and Innovation, the Department of Agriculture, Food and Marine, and is supported by the InvoFin SME Guarantee Facility with the financial backing of the European Union under Horizon 2020 financial instruments. The loans will be available through AIB, Bank of Ireland and Ulster Bank. Approval of the loans are subject to the bank's own credit policies and procedures. It should be noted that businesses cannot complete a loan application until they have received their eligibility letter from the SBCI. Okay, so the main features of the loan are: 1. Loans between 25,000 to 1.5 million per eligible enterprise. Maximum interest rate of 4%. The loan terms would range from 1 to 3 years. Loans up to 500,000 would be unsecured. Optional interest-only repayments may be available at the start of business, and the loan amount and terms is dependent on the loan purpose. So what can the loans be used for? They can be used for future working capital requirements and to fund innovation, change or adoption of your business to mitigate the impact of COVID-19. What can't the loans be used for? They can't be used for refinancing of undertakings in financial difficulties, refinancing of existing debts, for example, term loans, leases, hire purchases, etc. Okay, so who is eligible? So the eligible criteria are: SMEs must satisfy the COVID-19 criterion and one of the innovation criteria. So the COVID-19 criterion is that a business must be impacted by COVID-19 virus, resulting in the business turnover or profitability being negatively impacted by a minimum of 15%. And unfortunately, a lot of businesses will fall into that category. The second category then that you must be satisfied is the innovation criteria. So, number 1, at least 80% of the scheme loan will be spent on research and development and innovation activities associated with your response to the COVID-19 challenge, with the remainder of costs necessary to enable such activities. The business plan given to the financial provider must reflect the details of the expenditures and activities to be undertaken. 2, you intend to enter a new product or geographical market and the required investment is higher than 50% of average annual turnover in the preceding 5 years. Again, the business plan given to the finance provider must reflect details of this expenditure. 3, you will have registered at least one technology right in the last 24 months, and the purpose of the loan is to enable use of this technology right. Evidence of the technology right, e.g. the patent, utility model, design right, etc., must be provided. 4, you are an SME and research and innovation costs represent at least 10% of the total operating costs in at least one of the 3 years preceding this application, or in the case where there is no financial history as per the current financial statement. All costs must be certified by your accountant, by an accountant practicing in the Republic of Ireland. 5, you are a small, mid-cap and research and innovation costs represent either at least 50% of the total operating costs in at least one of the 3 years preceding this application, at least 10% per year of total operating costs in the last 3 years preceding this application. Again, these costs must be certified by a practicing accountant in the Republic of Ireland. 6, you have been awarded a research and development or innovation prize by the EU Institute or EU body over the last 24 months. Appropriate evidence of this prize is required. 7, you have received a grant, loan or guarantee from a European Research and Innovation Scheme or a regional national research or innovation support scheme in the last 3 years and are confirming that the loan is not covering the same expense. Appropriate evidence of the grant, loan or guarantee is required. 8. You are in an early stage SME and have received an investment over the last 24 months from a venture capital investor or business angel. Appropriate evidence of this investment needs also to be provided. 9. You intend to use the business loan to invest in producing, developing, or implementing new or substantially improved products, processes, or services, or production of delivery methods, including business models that are innovative and where there's a risk of a technological, industrial, or business failure as a result of an external expert. The business plan must demonstrate those risks of failure and evaluated by an external expert, e.g. an accountant, engineer, etc. 10. You are a fast-growing enterprise operating for less than 12 years with an average annualized employee or turnover growth greater than 20% a year over a 3-year period and with 10 or more employees at the beginning of that period. Evidence of this needs to be certified by an accountant again. 11. You are operating in a market for less than 7 years and research and innovation costs represent at least 5% of total operating costs in at least one of the 3 years preceding the loan application, or in the case of an enterprise, and particularly a startup, without any financial history according to the current financial statements. Evidence required for the application must be certified by an accountant. So, how do you apply for a loan? The SME, small mid-cap, must first complete the eligibility application form to check if they are eligible to apply for the bank for a loan under this scheme. If they are eligible, they will receive a letter of confirmation from the SBCI, which they can then present to the bank as part of the credit application process. The SBCI COVID-19 working capital loans became available on the 23rd of March 2020, and loan applications can be made to a financial provider once the eligibility letter is received. The scheme operates from March 2020 to March 2021 or until the scheme has been fully subscribed. Just referring back to the trading history, which will include the most up-to-date accounts, normally 2019, it is a pre-requirement that the company cannot be considered a firm in difficulty, which is defined by the central bank as follows. In the case of a limited liability company, where more than half of its subscribed shares capital has disappeared as a result of the accumulated losses. This is the case where deduction of accumulated losses from reserves and other elements generally considered as part of the own funds of the company leads to a negative cumulative amount that exceed half of the subscribed share capital, or where the undertaking is subject to collective insolvency proceedings under its domestic law for being placed in an insolvency proceedings at the request of its creditors. The other stumbling block in obtaining this finance is the eligibility criteria set out in the application form, which states that the borrower must satisfy the COVID-19 criteria, which is easy enough in this climate, and the innovation criteria in the application form. As the evidence already referred to, this innovation criteria is causing major issues to companies and has led to a low number of approvals. Another point to note that the potential businesses should consider is, if successful, an application under the scheme may impact your eligibility to receive future state aid, and we are aware that companies will be actively seeking such aid. In many cases, this will not be an issue, but something to bear in mind and could impact on R&D, employment and capital grants. As nothing is constant at the moment and further measures are being announced practically on a daily basis, I'll refer briefly to the most up-to-date measures. Okay. There is a Start grant for micro and small businesses based on a rates waiver rebate from 2019. A 3-month commercial rates waiver for impacted business. A €2 billion pandemic stabilisation and recovery fund within the Ireland Strategic Investment Fund, which will make capital available to medium and large enterprises at commercial terms. A €2 billion COVID-19 credit guarantee scheme to support lending to SMEs for terms ranging from 3 months to 6 years, which will be below the market interest rates. The warehousing of tax liabilities for a period of 12 months after recommendation of trading, during which time there will be no debt enforcement action taken by revenue and no interest charged accruing in respect of the warehouse debt. A commitment to local authorities to make up the rate shortfall so that local authorities can continue to provide full services to the public. However, many of these measures cannot be enacted until a new government is formed. Other government initiatives introduced include the following: the COVID-19 Enhanced Illness Benefit, the Pandemic Unemployment Payment, and the Wage Subsidy Scheme, which I'm sure you are all very familiar with and don't think there is need to go into detail about these. On the 20th of March, the government agreed with local authorities they should agreed to defer rates payments due from impacted businesses, for example, retail, hospitality, leisure, childcare sectors, etc., for 3 months until the end of May, which will need to be extended. A trading online scheme was introduced. This is an online voucher is available to SMEs with no more than 10 employees and less than 2 million in turnover, and the entity must have been trading for at least 6 months in the region of the local enterprise office to whom they are applying. The objective of the scheme is to support retailers and give them a greater online presence. Micro enterprises can access COVID-19 loans up to 500,000 from Microfinance Ireland with no repayments and no interest charge in the first 6 months. This is administered by the local enterprise office. There's also a business financial planning grant. A grant of up to 5,000 is available from Enterprise Ireland to assist companies to develop a business sustainment plan and to engage the services of an approved financial consultant. Enterprise Ireland will work with these companies on a one-to-one basis to support and implement the plan. There's also a new 2,500 Lean Business Improvement Grant available from Enterprise Ireland and the IDA to help companies quickly access enterprise expertise to review and optimize operations and identify key measures needed to ensure continued viability. This is available to small and medium enterprises. Other funding categories assistance include the following: an optional payment break of up to 3 months of businesses and for business and personal banking customers that won't affect credit rating, which has, I think, now been extended to 6 months. Interest suspended on VAT and PAYE payments. No debt enforcement by the Revenue Commissioners until further notice. Tax clearance certs to remain in place for all businesses over the coming months. All RCT rates reviews have been suspended and subcontractors will remain on current rates. Section 112B of the Tax Act allows one voucher per year of up to €500 to be given to an employee by an employer to his employees tax-free when certain criteria are met. The requirement that only one voucher a year has been waived, so where employers can give additional vouchers, but the maximum of the €500 limit is still in place. Cash flow is vital to the operation and successful running of a business. Businesses fail because they run out of cash, not necessarily due to lack of profit. Therefore, realistic cash flow forecasting is vital for your business plan, along with a detailed description of your business activity and plans for the future. For those of you who would have attended our budget seminars over the years, we've always been advocating to take advantage of various reliefs, such as capital acquisition and capital gains tax. And now with values at the lowest levels for many years, it might be a good opportunity for tax and succession planning to be explored. So that's it. I hope you found that informative.
Thank you, Sarah. So if anybody has any questions, you can come in and either put your hand up and I'll patch you in, or type questions in to the question box. I suppose, Sarah, I have one question. You mentioned in relation to the process of getting to SCBI and the fact that the banks it's their own lending policy. Are they being ultra conservative based on the outlook at this moment in time?
Yeah, normal banking criteria. So it's pretty much the same as before. I suppose that you have to meet all their own stress tests, etc.
And okay, yeah. So obviously things are very stressed at the moment. So so if there's any questions, as I say, or anyone wants to patch in, like the biggest difficulty, and I think that puts people off, is the business plan and projections, and effectively not knowing the roadmap of. We know where we are, where businesses are supposed to be reopening, but in our presentation earlier on, it was very much there's going to be bumps and hollows over the next number of months, and therefore, you know, probably further stresses that you need to probably take into account when you're going to the bank in the first instance.
And as I said, cash flows and projections at this time are very hard to predict.
Yes. And okay, just a question here now. Where could someone get templates for completing cash flows and plans?
Their accountant would have them.
Okay.
Yeah, and I presume anyone that is looking for a business has an accountant, so they should be able to supply them.
Okay. That's pretty much it. I don't think there's anyone looking to come in. There's no further questions. Paul, I'll leave it over to yourself.
Okay, super. Listen, thanks, Sarah. That was very helpful, I'm sure. I hope everybody found it useful. I assume small to medium sized enterprises that don't have their own accountants, your services would be available to do business plans and cash flows and explain how it all works to them. Yeah. Yeah.
Brilliant. And you can pass on our details. Yeah,
absolutely. So thanks again for that. Much appreciated. So I hope you all found it useful. And that you're able to apply some of the principles in your own business. So thanks for tuning in today. Remember, the presentation will be available to download on the Chamber's website, killarney.ie/resources. Next week, we will be in the company of Sea Change Limited, a consultancy who work in the area of risk assessment and health and safety, who will be advising us on best practice in the post-COVID-19 environment. We will also be joined by Adrian Cummins from the Restaurant Association of Ireland, and I look forward to hearing his insights into the future of the sector. Look forward to seeing you all next week, 11 a.m. Thanks very much and have a great week. Thanks a million. Bye-bye.
Thanks.
Thank you, Sarah.
Bye-bye.
Okay. Hey, we're all good. End webinar for all, that's the one.